Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily madman, the coach, the chef, the father of six, the best-selling author, the G-Daddy Boom Boom Pow, Gino Barbaro. Gino, how's it going?
I'm good, Mr. Stenziano. How you doing?
Always making it happen, big man. Today's guest is Ben Leybovitch. Ben is the founder of JustAskBenWhy.com and the Cashflow Freedom University. Ben has had an amazing journey that I'm not going to attempt to explain. In short, Ben is a super successful real estate guy with a great story. So without further ado, Ben, welcome to the show.
Pleasure to be with you guys. Thanks.
Great to have you here. Why don't you start out, tell us about your story and how you got started into real estate.
I'm a violinist by trade, and I played the violin since the age of 5. While at the University of Cincinnati, College Conservatory of Music, I was passed down a diagnosis of multiple sclerosis. My body went absolutely nuts on me, and that's what they came up with as MS. And basically, they said, "Don't do anything stupid, but we don't know how long you're going to keep out of the wheelchair." So it was quite a dichotomy that I had to work through, and I eventually came to real estate as the most viable thing for me to do. So there I am in real estate.
How old were you when you started real estate?
Well, that was 2006. So I think maybe about 30 years old, 31 years old when I started. But I had, like a lot of people, I had a lot of interest in real estate prior to that. I just didn't have the impetus, first of all. And secondly, I'm smart enough to realize how dangerous real estate is, can be and is. And so I took my time to study, but my hand was forced. And I always tell people that I'm blessed with MS because it wasn't a choice. Looking for passive income wasn't a choice. It was a necessity. It was either that or what. And for not having to make that choice, for it being made for me, helped me tremendously because I don't know what choices I would have made otherwise.
That's a great question. That's what I really wanted to ask you, Ben. What would you have done if you were fine? You would have still been a violinist. You would have still been a musician at this point in your life, you think? Probably, because at heart I'm a musician. I'm an artist. I'm a creative kind of guy. I've developed a certain disdain for music as a business, quote unquote. When you start mixing art and money, it gets very muddy in a hurry. And so, I don't like that end of it. But the fact is that Josh Dorkin, a good friend of mine on Bigger Pockets, calls me prima donna. And I am. Yeah, I am. I'm very comfortable on stage. This is where I spent most of my life prior to. And having the light pointed at me was, I loved it. And so I probably would have remained a musician. So, guys, everyone's got to listen to this. What his story is fantastic because his should in life became a must. He was going around, he was doing the normal thing. All of a sudden, if you want to get something done in life, as my buddy Tony Robbins says, one of my favorite guys I like to listen to, if your should becomes a must, you will find a way. So, everyone who wants to do real estate, it has to become a burning passion for you. And for Ben, it sounds like it just became a burning passion. He had to do it, and it's worked out great. That's awesome.
Well, at the risk of being controversial in the first 20 seconds of the interview, I don't like real estate. I'm not passionate about real estate. I'm passionate about what it can do for people.
Yes.
What it has done for me, but nobody likes dealing with nonsense that's part and parcel of the game, of this game. It's a very difficult game, mentally, emotionally, physically. I don't touch my own property, but still, physiology takes a beating
just simply because of the moral and emotional stress and the mental fatigue and all of that. There's nothing easy about this sport, nothing at all. It's a full contact sport for sure, and I don't like it. I'd much rather be playing the fiddle. That's not in the cards, though, you know?
Uh-huh.
So there you go.
It's
Let me
really
know.
interesting, Ben. My brother actually just graduated from the Eastman School of Music, and
Yeah, that's right.
yeah, it's just interesting that you're saying that because he's in that kind of same predicament as you, where it's okay, now it's time for him to make some money, but it's mixing. He wants to pursue a career playing the saxophone, and that's where it gets challenging. So I found that very interesting, that point that you made.
Right. Especially, he is in a very interesting predicament because Eastman is a very classical school.
Yep.
By classical, I mean Beethoven, Mozart, Mahler, that kind of classical. So he's a classical saxophonist. Guess how many of those are needed in an orchestra?
Handful less.
One.
Okay, there you go.
The rest of them are clarinetists that switch over to saxophone. The score requires it, or else they outsource them. So how many orchestras are there? How many potential pool of jobs are there? So basically, he's going to pay a price for being stupid.
Yep.
Go to Eastman.
He's following his passion though, so we'll see what happens.
But that's and we're getting off track from real estate, but that's the rub on this.
Yep.
Follow your passion doesn't make any money.
Yep.
So let me ask you, Ben, what is your investment focus in real estate?
Multifamily.
And more specific, do you buy duplexes, triplexes, apartment complexes?
Well, so today I only look at 100 plus.
Okay.
But in my own portfolio to date, like the biggest building I've got is a 10.
Okay.
I don't look at duplex. In fact, I haven't bought anything since 2013 because I'm in an interesting situation where buying another fourplex doesn't make a damn bit of difference. So I've switched my perspective away from just strictly passive cash flow to IRR underwriting, which is completely different methodology altogether. And it really kind of only works on the big stuff. So syndication level stuff. So syndication, basically private placement syndication, is where my head is today. But I got here like everybody else, started with a few singles, figured out they didn't work as well in my marketplace, went on to small multifamily, kind of stayed there, built up a portfolio, and not as hungry as I was for the same thing all over again. To get to the next level, you're looking at 100, 200 kind of thing. And that's where I am.
Can you speak to your market? What type of market do you have?
Well, I'm in a small town called Lima in Ohio, which I'm getting out of within months. In fact, we just went traveling for a couple of weeks to a couple of different markets, trying to place where we want to be. And of course, real estate is big part of that decision. But my market is a very backwards Midwest, used to be industrial, but nothing really has happened in a good long time kind of market. 50,000 population, nothing ever happens. I mean, it's not particularly going downhill to speed of light. I mean, it's not going up, so by default it's going down. But it's going to be here long enough for me to do what I need to do, and I've already done here what I need to do. And for me, growth and maturity and revitalization of what I do in real estate involves going to a different market. And simply put, I can't do it from here, so I'm getting the hell out of here.
So are you going to be selling your portfolio, or are you going to be just keep maintaining it, managing it, or?
I am probably going to keep it and manage it. I've got systems in place whereby I don't think it's going to be too big of a challenge, and I'm prepared for taking some losses, for having to pay for some things that I typically wouldn't have to pay for. But understand, I haven't seen an inside of a unit in at least a year.
That's great.
And the last time I saw a unit was one time there was a problem, and I went inside, I did it one time the previous year. So all in all, I've seen one unit in 2 years. And that's a function of how I buy, what I buy, where I buy. Because again, it goes back to this MS diagnosis. What if I am in a wheelchair? Can I still manage, and can this thing still do what it needs to do for me? If I can't go inside a unit. So one of the primary objectives for me from the start was I'm not going to be the one swinging the hammer. I know I won't make as much money as somebody else, but I won't be the one swinging the hammer. Because if I have to, this isn't for me. But besides that, I don't want to. Doesn't cater a solution to my problem.
So let me backtrack the previous. How did you actually get into real estate as far as education? Because I think it's something important for a lot of the listeners. They want to start. They don't know where to start. I mean, I see that you started out with singles. I never really bought singles. My market wasn't really good for singles. I jumped right into multifamilies. Me and Jake did that down south. And I had already been coached by people. I had some trainings. I did a lot of reading. How did you actually start and immerse yourself in the business?
Read Rich Dad, Poor Dad, just like everybody else. I think I bought a course on the infomercial by Ron LeGrand. It was a teaser course for $59 or whatever it was. That must have been 15 years back. Tried to thread the needles together in a way that they would make sense. Of course, nothing made sense because they don't tell you anything in those courses. But when all this went down, with MS, an opportunity in Lima became available to set up a nonprofit music school for kids, and so I went down here and my wife, or then fiance, now my wife, traveled down here and took some telephone numbers on the for rent signs. Well, it just so happens that one of the numbers I called was an executive style duplex that at that point, in Lima, Ohio, rented for $700, where, back in the day, that was it. That was executive, with nice finishing textures, a fireplace, and the whole shebang, right? Two. So I ended up talking to him for quite a while. He was one of the bigger builders in town. He died shortly thereafter, and I didn't get a chance to really have a relationship with him. But one thing he did tell me is that if I'm interested in real estate, to my objection that I didn't have any money to get into the game with, he said, you don't need any money. You need education. So there was that piece of it. And the other piece of it was an interesting scenario whereby when I was in the first year of the master program at CCM, a freshman came in. And what his father did is buy him a house across the street from campus, and they put locks on all of the doors, and he became a landlord. And for the life of me, I couldn't figure, the kid couldn't play worth a shit. Like, we're at Cincinnati. I'm like, one of the, I don't want to toot my own horn, but whatever. I knew how to play. The kid had no idea how to play. He was there, and he had this aura about him that he's going to be okay. He's learning the lessons that he needs to be learning. And I couldn't put it together until I could put it together. The guy was living there for free, and they bought the house, and when he graduated, they sold the house, that kind of thing. So little incidental things like that. And then with being pushed into it with MS, pushed into having to figure out how things really work, just kind of everything gelled. And I realized that was that. And then the other thing was that when we started a school, I think the second year in the school business, I made like $100,000. And the amount of money I had to pay in taxes just kind of was crazy. And my CPA said, I can't help you because everything you're doing here is earned income. And she was right. There was not, that's even before the days of solo 401k. I don't even know if they invented that by then. So all of that just kind of gelled. So I read Rich Dad Poor Dad. I kind of understood the concepts more or less. I saw this kid doing something that didn't make sense, and yet I knew I was missing something big, which is why it didn't make sense. I had this builder guy tell me that, you don't need money if you know what's going on and how to do it. And then there was the basic necessity of having to protect my earning power and convert it to more passive nature one way or the other. So everything gelled together and just led to real estate.
Wow, that's awesome. How has your investment strategy been changed over the last 5 years?
Well, it's interesting. I started out with the sole objective of passive cash flow, right? Because the formula is very simple. They told me I wouldn't be able to work. You can't work, you can't make money. You can't make money, you're screwed. You can't do anything else in life. So therefore, passive cash flow, making income that was not requiring of my daily presence to it in order to perpetuate itself, that became the key. So that kind of, meant rentals. In my mind, back in the day, meant rentals. What I've realized in the past 5 years is that everything, I wouldn't even say that I realized in the past 5 years. I innately felt it that cash flow is only any good if it's stable. Just because it's passive doesn't make it stable. You can't rely on it if it's not stable. And then if you work it backwards from cash flow to understand what makes cash flow stable and look at the asset that you are buying that is building that is throwing off this cash flow, then you begin to realize that there are only specific kind of assets. Well, I always kind of sensed that reality, but I saw it in a liberal arts kind of way. What happened in the past 5 years as I became more experienced and really understood what's going on is I was able to look at it mathematically in terms of IRR, and which requires you to project your exit. Because when we buy passive cash flow, we're not necessarily thinking about our exit. And it's become very popular to do that, and it's a very limited mindset to do that, because the ability to exit, A, constitutes your safety, and B, if you can't exit with making a lot of money, you're probably not going to buy this asset no matter what the cash flow is. Because by the time you discount this cash flow to everything you have to discount it to, you realize that in real terms, you're not making much money. Warren Buffett says diversification is protection against ignorance, and real estate appreciation is protection against ignorance. Well, you can't bank on accidental appreciation, but you have to buy deals where you can dictate the play. And so my thinking shifted quite a lot to looking at assets that will not only generate cash flow, but they will also appreciate. So nowadays I underwrite everything to IRR. And this is also the reason I'm not really interested in small deals right now, because the punch from them isn't really enough to get me interested. In terms of cash flow, there's easier ways than real estate to generate cash flow. But in terms of balance sheet, which is what I'm after now, the small deals just don't make the punch.
And it's funny that you say that, because I think Jake and I have realized that also. The smaller deals, I love small deals. For some reason, that was my comfort zone. And I think Jake likes to go bigger. I don't want to speak for him, but I think he has that same mindset. You go in there, and all it is with the bigger deals is just more zeros, and it's just bigger numbers, really. I mean, whether you're buying a 20 unit or a 200 unit, if you have the systems and the teams in place, I think you can achieve that. Now, that's what's leading me to my next question. Now that you're getting bigger and all, how have you built your teams? And what advice do you have for team building?
I think it's hugely important to partner up with people who know more than you do. Having done 10 years worth of ownership of real estate, I see the faults in my thinking, and so I'm underwriting things very differently. And I have a partner who is quite a bit more experienced than me when it comes to this big stuff, syndication level stuff. Mm-hmm. And so I work with him. As far as, I always rag on property management because there's two kinds of property management. There's the mom and pop deal, and then there is professional property management. What I teach people on a small scale is that you can't afford property management. You just cannot afford it. Because why? Because what you are buying is forced appreciation deals. You're buying things to reposition. And frankly, mom and pop property management companies whose core business is to sell pretty houses to pretty people, and they have a girl or a guy in the office who does a little bit of management, that's not going to get it done. So you have to be involved in real estate is a job. It's not passive until it's stable. So with that being said, what you buy has to reflect the ease of management which you're going to have to absorb. Because if you can't afford property management, if you're going to manage it yourself, then you want to work as little as possible. And that is a function of what you've bought. There's nothing, if you buy the wrong kind of asset, there's nothing you can do to fix that. So this is what I teach people to isolate, is how to look at what you are buying, because this is an important part for me. I have no problem getting on the phone and making a call. I just don't want to be doing it all day, every day. And that's a function of what you bought, who you are attracting, what the mechanicals are, all that. Now, at the syndication level, you're never going to want to manage your own stuff. You want professionals doing it. You want people with the systems to be able to do that. So, you're underwriting payroll for employees right on site. Then you have a property management company that's telling the employees what to do. They're reporting to you. There's a whole infrastructure in place. So you just have to know which questions to ask. And that's where it's important to partner up with somebody who knows more than you do, because they know which questions to ask because they've been through it.
But Ben, let me ask you, leading up to the syndication part, don't you think you were fortunate, like you said, you put all the pieces together, saying that as far as growing your team and growing your business, you had, I wouldn't say the luxury, but you were fortunate enough to start small, learn the business, learn how to ask these questions, and then you have that ability to go bigger because you already have that stuff set into place. Don't you think that's...
Well, of course. And moreover, what I've discovered, what I've come to, is that everybody says learning happens in a stairwell, type of movement whereby you go up, you jump up, and then you level off, and then you jump up from there. What I've discovered, and this is what people are missing, is that if you are truly a capable student, what happens to you is that you jump up, you reach a certain plateau, but in order to jump to the next level, you first have to set aside everything you learned. Because you can only process information as much as your previous experience will allow you to have perspective on this information. And so what happens is that if you try to retain everything you learned at level 1 and build on that, there are flaws in what you learned at level 1. So if you just try to build on that, there's going to be fundamental flaws in everything that you do thereon. After. And so the interesting thing is that, you learn at this level, and then you have to come down to ground zero. And you have to set aside, you have to internalize everything you learned. You don't, lose it. You put perspective on it, and then you jump to the next highest level. And the process repeats itself. So To answer your question, am I lucky that I had the opportunity to start small and learn? Absolutely. But I found that to graduate to the next level, I've had to set aside what I thought I knew and learn all over again.
So have you done syndication yet, Ben?
Well, everything I've done is syndication. It's just that I've done it on the debt side.
Okay.
So
yeah, go ahead.
equity-wise, private placement-wise, no. I have been underwriting deals for 18 months now.
Gotcha.
The latest one we went after just last week. We found out we're not going to be able to make that work. But yeah, it's a very difficult market out there.
So what are your parameters for underwriting? What kind of returns are you looking for when you try to syndicate a deal?
15% IRR to the partner. The rest of it really doesn't matter, because if you can't raise equity, and in my experience, you're going to have 15% IRR in order to raise equity. If you can't raise the equity, there's nothing else. So 15% IRR is what I think it takes.
So then, and what type of markets are you looking into to get this type of return? I mean, like you said, are you looking for blended forced appreciation, cap appreciation plus cash flow?
You can't do it without forced appreciation. And forced appreciation is a function of the marketplace, right? So the marketplace has to support and recognize what you are doing.
Mm-hmm.
So yeah, there has to be room to begin with,
Okay.
but there also has to be inherent strength in the marketplace. I've written a lot of articles on cheap houses. I call them pigs, where just because it's cheap doesn't make it good.
Mm-hmm.
Because it's always going to stay cheap, and we don't want that. We want to bridge that equity one way or the other. Everything I've ever done, my claim to fame is nothing down, and for obvious reasons I started that way. And once I figured out that you don't have to put money in the deal, I figured, why bother? Right? If it works with no money, make it work with no money. So, and syndication is the same kind of concept. It takes above average deal, a significantly above average deal, and it takes very precise underwriting.
What would you say your best real estate advice or tip for the listeners would be?
It sounds very cliche, but figure out why. I mean, I have people asking me these questions. I have CPAs coming to me. They're making $150,000 a year. Professional people, right? I want to get into real estate. My question is why? Real estate solves a problem for guys like you, for guys like me, because we can become professionals at this sport. Real estate is just a pain in the ass. I mean, having tenants or having to manage rehabs and everything else. What is your competitive advantage? If you are able to pull down $150,000, $200,000 salary, are you sure that real estate is the best thing for you to do, at least actively? Why are you going to take your money to Ohio or Indiana and buy pigs? What problem is that going to solve for you?
Yeah, that's interesting, because we speak to people and they know that they should be investing in real estate because, well, they don't know. They say, well, it's a sexy thing to do. Yeah, I don't want to put my money in the stock market. I know so and so who's making it doing this. So it's sometimes it's just I should be doing it, but they don't find that why. You had your why, obviously.
Right.
Gino and I had our why, but I can relate to that. That's pretty good. We're going to hit a short answer section right now. Some questions. So here we go. You ready?
Sure.
Okay. What is your best habit for success?
I'll listen to my wife.
Oh man, I don't know. You're gonna get yourself in trouble here. What is your biggest mistake in business?
I'm not well organized at all, and I'm not going to have that fight. I just am not, and that's that.
Favorite book?
What's it called? Something like how I converted 1,000 into 1,000,000 in my spare time. Or
Oh,
whatever.
Bill Nickerson.
Nickerson, yes.
Yeah.
I don't know that one. I'm going to check that
That's
out.
back in the 70s, Jake. I don't know if you're
old. That's
yeah, I don't know
old.
if you're I don't know if you were little back then, Jake.
That's before the name Guru existed.
I'll go to the library and see if I can dust something off on that one.
But that's where I got it from. Back in the day when I started, I just went to Lima Public Library and I put into the database real estate investing. That's one of the things that came up. And it was a great book, easy to read, and tells you everything you need to know. That like this whole concept of IRR, this whole underwriting the entire life cycle, all of the cash flows, projecting the exit before you enter, this whole concept, he puts it in very liberal arts terms and really does it more applicable to flipping than anything else. But if you open your mind and you read between the lines, that'll tell you everything you need to know about successful real estate investing. Those are the mistakes I made. I kind of heard the bells when I read the book, but I couldn't see them. I didn't see them, so I made some of those mistakes. Now I know I should have.
Well, and through your experience, you started to realize some of the stuff you probably learned prior to getting into it. That's
correct.
That's cool. Best deal and why?
I don't know. Every one of my deals looks about the same way. I get in with no cash or almost no cash. I force appreciation. I bridge the equity. I buy the next one. Everything up to now has looked the same way. I can tell you probably the 10 unit I bought in 2013, probably the best deal to date, simply because, it's the biggest cash flow. It's the biggest bang for the buck. It just makes a lot of sense in my portfolio.
What project are you excited about right now?
Well, I'm working very hard on finding a syndication level deal. And I'm relocating into a different market soon enough. And I'm growing Cash Flow Freedom University. And I'm excited about all of it. I have to work several tracks at the same time. Maybe it's musician ADD thing or whatever, but I can't do one thing. So I can't tell you one that I'm excited and the other one I'm not. I'm just excited about being alive, being able to move, and doing, achieving.
No, I agree. I think some of the things you said about finding your why, totally agree with that. I feel you there. And I thought it was kind of funny because a lot of people get on and they say, "Oh, we love real estate; it's the best thing ever." And you said real estate is pain, and man, it is a struggle sometimes. There's no doubt. We're closing on 156 units tomorrow, actually, and this last week has been a grind. It's been tough. Find your competitive advantage, no doubt, and you're talking about multiple streams of income. We know that. So, how can the listeners get a hold of you, Ben?
www.justaskbenwhy.com.
All right, very cool. Ben, thank you very much. It was great having you, and maybe we'll do this again in the future.
Absolutely.
Thanks, Ben.
Thanks for having me. Thanks, guys.
We trust that you enjoyed the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.